Should I say good evening, good morning now? Where are we at?
It doesn't
Good
matter. Hey,
morning.
Good
It's good
day.
morning to Matt.
Yeah, it is morning.
yes, yeah, you just woke up from a nap, right? So
I did just wake up from a nap. Hey, everybody, this is
I
the
woke.
Tesla Tracker. I just woke up from a nap. I'm here with Cantonese Cat and the Great Mattsby. And we're
Hello,
going
hello.
to, I thought maybe it'd be fun this week to talk about the Russell 2000 Small Caps ETF, because we were just kind of talking about off the cuff last time. And I've sort of long had this idea that kind of came from my other Elliottician friends back when I was trading over at ElliotWaveTrader.net. I was just a client there, and not anything big. Um, but one of the theories that we kind of bounced around about the IWM is that it was always going to be kind of a poster child for, have you seen me lately for always looking like it's gonna do well, and then it never quite makes it. Um, because we have this idea that with the IWM, you know, you've got this big basket of small caps, and then as soon as one does well, it graduates and it leaves the IWM and goes on to like the SPY or whatnot, and then it leaves all the rest of the small caps behind to falter again. And I've been doing this sort of a little Tesla tracker triangle here where it looks like it's in a bearish slump. So with price coming down into the pandemic low here, and then this nice strong push up when everything, rising tide was lifting all the boats after the pandemic. And then it kind of topped out here at 236. And then it kind of comes down like this, down to about 162.21. Back up again. My tracker triangles tend to go like this. I need my tool. I need this tool.
yeah, that was a very nasty distributive top back in 2021, and yeah, and then I guess technically we drew it this way. Then yeah, we're kind of still stuck in a symmetrical triangle.
Yeah, when I look at it this way,
Yeah,
and these always end for me if I start tracking the triangle with a downtrend, then ultimately it finishes with a downtrend. But of course, it's even worse than that. So, actually, now that I'm saying this out loud, it seems kind of silly because when I do these triangles, if it started a downtrend here and it's going to finish the downtrend, it's also supposed to end the downtrend much
woo!
lower, much lower than it began. So I know that's not going to happen.
Are
So
you sure? I mean, if you're bearish, you gotta be having conviction on it.
I'm not that bearish on it. I just thought it might go down a little bit, but now that I've set this whole thing up, I realize that with my little tracker triangles, they
Oh
usually,
man.
if this was the trend it was doing before, it's got to it's got to want to finish the trend, and all this just creates a lot of pressure for it to just complete down this way. That's not going to happen. This is ridiculous. So
That's apocalypse right there. I mean, like
that is the apocalypse.
we need to nail out our windows, and that's
So now that I've debunked myself, why don't you tell me about what you see for the IWM?
well, do you have any other bearish cases on it? I mean, I think it's good
Just
to
it's just this general idea that the IWM always seems to
yeah,
never do quite as well as its buddies, the
yeah,
SPY, the Nasdaq,
yeah. That's fair.
and
We'll
so
talk a little
forth.
bit more about that. Yeah, that's fair.
But you want
But
to do better,
but
you
if you
know.
look at the moving averages too, right? I mean, you got a lot of moving averages. They're all pointing in the bullish way, right? So it's at least in
That
short term, yeah,
that
like
is that is true. Even because like even my own rule is that I keep a fast line on for the 200. So my 200 moving average is this red one, and the
yeah,
purple is the 188. So if the 188's over the 200, it's in a bullish run.
yeah. But Tracker, we need a bear, so you gotta keep being a
I'm
bear.
sorry.
Yeah, stop being bullish. That's our job.
It just always feels like it's gonna peak, and then it peaks, and then it just kind of falls away. one person was drawing this. Can't remember. I wish I could remember who it was, but they're just saying basically, we haven't moved anywhere
Yeah.
since 2020.
Yeah, that's a fact. That's a fact.
It
Yeah,
just hasn't gone anywhere. In fact, we spent more time down here than we did up here.
Right.
It doesn't feel very bullish, does it?
Well, I mean, it depends on what you think, because you're always going to have some distribution, some accumulation, but yeah, I see what you're saying.
It feels a little like Tesla.
Okay.
Except actually Tesla's worse off now than it was before. So I'm going to stop my screen sharing here.
Okay.
Should I start mine or?
Yes, Matt. Please destroy the bear case.
Okay.
Show me how I'm wrong.
All right, can you guys see my screen?
Yes.
All right, so let me just take that up real quick. Okay, so this is my IWM chart on linear scale first, because I always do linear scale first. And this green one is the 45, right? And look at how perfect it has been the whole time, all the way up. And with Gann, it was obvious why that was distribution up here, right? It hit the arc, right? But now what do we see really happening? Like after this level was hit and even successfully back tested, even the blue angle was back tested back during COVID. Now we're stuck at the next level, right? Which really means that this level is probably going to hold, especially since it's above the 45 and the blue level and all those moving averages that you just saw on your screen tracker. So basically what's probably going to happen is there's going to be still more resistance up here because of the arcs, but once enough time passes, maybe like October, November, and look where this is like election time, right? It might even start going back up and then finally get up to the 280 level right up there, right? So if we do that, and then we add the fibs from this high right here to the low down there, then we can see that it held this 2.618 Fibonacci 169 very, very perfectly for a very long time, which was also the previous all-time high before breakout, right? And now it's clearly gravitating towards the 3.618, which is actually matching the arcs, which is more proof that this will be more resistance for some time until it's able to break above to maybe the 4.236 and higher. And since it even never got to the 4.236 from way back then, it should at least hit that before it gets to the green arcs as well. So this is my case on linear scale. So now let's go to the log scale chart here. So I had some Fibonacci's pulled up again from, I'll do the Fibonacci first before the Gann, before this high to that low down there. And we can see right now it's at the 1.272, like oscillating back and forth. And it's looking like it's trying to hold it as support before it moves up to the 1.414 Fibonacci. But you can see on log scale how it held that 886 fib very, very well before bouncing higher and higher. So let's just take off my magnet here and I'll delete this. So the log scale chart is also telling a very similar story as the linear, right? The 45 is in a different location here, but it's also a very important angle. And it's also at the next level as well. And just like this orange level held for a long time, now this blue level is holding for a long time, which means that it should gravitate up towards the arcs. And even here, this is where the angles on the arcs meet here. It's like 2026, so it's a little bit farther, but it probably will get up to the arcs much sooner than that, because we saw on linear scale that time is running out quicker before the resistance levels become less and less resistance, right? So what that really ultimately means, though, since we met this one level here for a long time, and now we're at this one, that means probably this one will get hit eventually in the 480s in the future, but who knows when. Like if it followed the 45 the whole time, it could take way in the future, like 2033 or whatnot, to get up there. But it is
that's the IWM I know.
Yeah. So if it does follow this 45, it's possible that could be the scenario here. But the trend is so far your friend, and both linear and log scale are showing that this level is holding, and especially when it has the confluence of an angle and a level, it acts as a more of a supportive zone. And yeah, I don't really see any bear case here, unless like it gets up to these arcs and then gets rejected and this goes back down, right? That's the only situation. But since we're not there yet at these arcs, but since it's not there yet, it should gravitate up first anyways, and before it even tries to go down. But because of these levels being held as support, I think price will continue to go higher. And even if we put on the Ichimoku cloud here, we'll zoom in. It's still like 100% bullish on the weekly chart, right?
Yeah.
It's above everything. It's right now, it's just back testing the conversion line.
Beautiful.
And could it come back down to the baseline, or could it come back down to the blue line? Yeah, I think it probably could. But I think this level, because you can see how important this level is right here.
Yeah.
I think it should hold.
Yeah.
So
it's actually beautiful here on the.
And do you have something to show on your end there, Kat?
Yeah, I do. Yeah, I actually have a few things to talk about too. Anything else you want to share? No?
No, I just like every indicator is just showing that it's just it's ready to go higher. It just needs a little more time, you know, that's all.
Yeah. I'm gonna talk a little bit more. Let me see if we can stop sharing. I can jump in and we can
just go ahead and share your screen.
Okay, let me go ahead and do that. Yeah, can you see my screen?
Yes.
Yeah, so the whole idea is, I think Tracker is concerned. He's not necessarily, you're not necessarily bearish on IWM per se. You just think that it's just been underperforming, you know, for many years in terms of versus big caps versus, you know, many other things, right? And your rationale is not wrong. The only thing is, has it always been like that in history, right? So instead of looking at IWM, actually look at the Russell, you know, 2000 index, like which goes back even a little bit further in time. So this chart here is Russell 2000 over SPX, which is, you know, S&P 500 index, right? So you're seeing if it's high, you know that Russell's outperforming. If it's low, you know that the SPY, you know, S&P 500 is outperforming, right? So you can see in history, I think there's a little bit of recency bias to say that the small cap indexes has been underperforming, because that is certainly the case really since about 2014 all the way up to now, right? So that's been about 10 years, and everybody just can't remember what happened in the last 10 years, as opposed to what happened, you know, 10 years before that, which is basically showing a lot of outperformance with a small cap, right? That wasn't always the case, right?
You're quite right. You're quite right, because I've just been trading for like 15 years. So
yeah, so you have to
the last 15 years says, oh, Russell's never done great versus the SPX.
Right, but that's not true. Because if you look like a little bit further back in history, you'll see that. One thing I can say that is, if you just look at the RSI, you can see something that this is a monthly chart. If you look at the RSI, you can see like whenever you start to have a little bit of like a divergence, for example, like you see price. Yeah, see, I already drew this over here. You see price kind of gone up. In this particular case, not really price. It's more like Russell 1000 over S&P 500. You can see that as Russell outperforms, and it is outperforming under a bearish divergence down here on the RSI, right? Like you can see the trend's exhausting, right? So that really marks the top. I mean, it didn't really become like the top. It kind of came a little bit of a double top before it starts kind of rolling over, right? But I think this bearish diversion that's been going on for like 4 years probably meant something. Probably just meant that, hey, you know, time Russell 2000 over S&P 500 is over. It's time for large caps to take over. And certainly that's been happening over the last, you know, 10, 15 years, right? But something that's also very similar has happened too over the last 4 years. What you're seeing here is you're seeing that the Russell 2000 has been underperforming the S&P 500, but you actually see a bullish divergence over here, right? So but you're really talking about like, kind of like a little bit inverse picture over here, right? So I wonder whether or not we're at a juncture where we could potentially have a reversal of the trend, right? Because you always seem to have this kind of oscillation going on based on history, and based on this, you know, bullish divergence.
The wheel of history is turning.
Right. Yeah. And it looks like there's a loss of momentum for the large caps versus Russell 2000. That's basically what this indicator is showing, right? Another thing too, if you look at the history of all this, available data that we have, you can see like RSI has really been like oversold down in like the 20s over here for the Russell versus S&P 500 3 times, right? Which mark like one over here, and one over here, right? So, oh, sorry, one over here. And then we went, and then the actual ratio actually went underneath of that, but the RSI went up. But these are really like the oversold conditions for Russell, right? So I think very, very possible whenever you have something like this and you have bullish divergence and it went down further, I think that the trend may be ending relatively soon. So that's one thing to kind of pay attention to too, because whatever it is that you think is going to happen, it doesn't always have to end up being that way, right? One last thing too, we also had a very important horizontal zone, So I wonder whether or not this could be, and there's a lot of confluences here, right? Like 4 years of bullish divergence, horizontal zone. I wonder whether or not we're at a pivot over here to potentially maybe form a little bit like a double bottom potentially, and then it might end up reversing. And when it does, it could be pretty powerful. So that's one thought, right? The other thought was I also wanted to show you this too, is the IWM over SPY. Actually, no, that's not what I want to do. Oh, yeah. I want to show you IWM chart. And I'm going to get rid of the momentum. I'm going to get rid of my GAN, because my GAN is not as good as Matt's. So let's hide it. What I'm going to show here is I'm going to show you, I'm going to add S&P 500. I'm going to overlay it. Since the induction of the IWM, you can actually see that IWM has actually outperformed SPY. Right? Really since like 2000.
Wow.
Yeah, so that's an argument, right? Another thing I also want to point, I'm going to make both of these lines just to kind of make things a little bit more consistent here. What I want to show you here, okay, so if you ignore the dot-com bubble crash, you ignore the great financial crisis, you just start looking from great financial crisis moving forward, and just like what Matt is showing, like if these things go in cycles, so probably like I can count like 4 cycles. Cycle number 1 over here, right? Cycle number 2, cycle number 3, and cycle number 4, right? So if you look over here in terms of what happens is you're going to have a pretty big dip down here. And whenever, and SPY is going to also have a very big dip down here. But whenever S&P 500, when it kind of comes up from this big dip, whenever it tries to make a higher high, you can see that Russell always also trying to make a higher high over here. But then you end up going to have a sell off on both. And that, I think that might be like a little bit of a rotation sell off right around there. So what happens is whenever S&P 500 makes a higher high, Russell 2000 within like a year or so, like it's end up go like pretty parabolic, like, and it's going to make a higher high pretty significantly after that, right? So that's that cycle right there from 2011 all the way to like maybe like 2014, 2015 or so, right? And you end up having a little bit of a dump right there, right? And you can see that unfortunately, Russell 2000 is going to be a lot more sensitive to any kind of economic downturn, as well as S&P 500 holds pretty well. So what we're going to see here is, S&P 500 makes a higher high, right? An all-time high over here. Russell 2000 lagging. They both go down, correct, rotate, and the next thing you know, Russell 2000 just went nuts, right? So whenever S&P 500 makes a new higher high, I think it might take maybe a few months to a year for Russell 2000 to catch up with rotation funds going into the small caps, and they're just going to pump it. Right. Same thing happened over here at the dump, from the trade conflict and from the from the COVID, like big dump for Russell, right? S&P 500 held pretty well, but same thing, right? As soon as the S&P 500 over here made an all-time high, Russell also did like a little bit of peak right here, right? But there's a little bit of rotation that happened afterwards. And then you have like this beast mode of IWM just going like crazy, right? Yeah, so S&P 500 also follows, but like, look at this, like this is insane, right? So what's happening here so far, right? S&P 500 made a higher high, right? Made an all-time high. Russell 2000 is lagging. We have a little bit of a slump, maybe a little bit of rotation going on. What's going to happen next? You tell me. So that's one thing too. And yeah, let me go back to any questions so far, guys.
That's an amazing way to look at this. I'm just like, my mind is kind of blown.
I want to show you something else that I also thought was amazing too, and I just saw this earlier. You want to look at the money supply, the M2 money supply. This data is from the Federal Reserve. So that's the blue line right there. It tells you how much money is available, for the total US money supply, right? It's like completely perfectly aligned with the IWM.
Oh yeah.
Look at that. It's like every single time when it dips underneath this line over here, like these are buying opportunities because it's probably going to catch up to the money supply. That's why they print money. Like you're going to have some fears, you're going to have big sell off, but the money printer keeps going and it keeps on pumping up stocks, right? And it just keeps on doing this and it follows this line to a T, even for this big parabolic move up here during COVID. Like it followed it to a T, and you have some quantitative tightening over here, fall it to a T, right? It actually served a little bit as a rejection level over there. And right now it's kind of fluctuating around that level. And guess what the money supply is doing? If you just look at the money supply by itself, it looks like it's changing trend, doesn't it?
Yeah.
Yeah, it looks like it was going down with quantitative tightening, and now you're having a little bit of easing here, right? You can actually look at this with the Bollinger Band. This is like a monthly chart. You can actually look at the Bollinger Band. And what are you seeing here? You're seeing that it looks like it wants to challenge the 20-month moving average. It looks like it wants to cross back above. It looks like the 20-month moving average is flattening. It looks like Bollinger Band is squeezing. So
Squeezing.
these are like absolutely like beautiful. I just saw that and I was like, wow. And that was just like an hour ago. That's what I did while you were taking a nap.
Wow. Oh my gosh.
And one more thing too, I want to show you a couple other things. Just going back to IWM chart and get rid of the Bollinger. I'm gonna go back to it just for a second. I probably took up too much of your time, but
No. This is you've blown my mind 3 times already now. Just keep going. Keep going.
yeah, I'll keep going.
Take it.
I'll show you one more thing. I'll show you, like everybody talks about how IWM is rate sensitive, right? This and that, right?
Yeah.
Okay, let's put up the 2 years, see whether or not IWM is actually rate sensitive. Do you think it's rate sensitive? Do you think that when rates go up, IWM is going to go down? Does it look like that to you? No, right?
No, it does not.
No.
Like,
What is everybody on CNBC talking about? Why are they keep on getting fixated on the rate narrative? Look at global liquidity. Stop talking about rates. The more you talk about rates, the more I want to buy IWM.
Well, it's the same reason why they keep on bringing up Elon's pay package too, because they want to push things down further.
Yeah, like why? I know exactly why they're doing it. You know exactly why they're doing it. But okay, I'm done talking about all that. I'm just going to talk about if you believe in cycles, which again I pointed out. I think so far I pointed out like 4 cycles after the great financial crisis, right? Cycle number 1, 2, 3, and 4. Each of those, you basically have like your 20-month moving average, basically just kind of flattening out. And then when it starts to upslope, that's when a new bull trend starts, right? Flattening out, upslope, new bull trend, right? If it tries to go upslope here a little bit before COVID, but it just wasn't able to because of COVID, right? And it went back down and it upslope and it bull trend, right? So far what's happening here in the 20-month moving average, right? It looks like we have a little bit of a squeeze over here too. Every single time before it goes up, you have a little bit of a squeeze, right? You have a little bit of a squeeze, right? And you also have a little bit of a downtrend that push either towards the lower Bollinger Band, right? Or closer to the lower Bollinger Band or through the lower Bollinger Band. And then it goes up, right? What just happened, right? So I think we are ready, and also just price just spending a lot of time closer to the upper Bollinger Band here. It looks like it just wants to kind of push up a little bit further and just kind of push up a little bit higher, right? That's what I'm seeing on the Bollinger Band now. I have to talk about the monthly Ichimoku cloud. That's my favorite thing.
it is fantastic.
Yeah, if you look at this, it just looks absolutely gorgeous. What happened over the last few cycles, right? It back tested the top of the Ichimoku cloud, ran for like 3 years, right? Came back tested the top of the Ichimoku cloud, ran for another 2 years, right? Came back down, went through the Ichimoku cloud, but bounced back up in V-shaped recovery, back tested the top of the cloud, went parabolic, right? What happened this cycle so far? Tested the bottom of the Ichimoku cloud, bound V-shaped, and right now we back tested the top of the Ichimoku cloud. So this looks like a lot of confluence in terms of what's happening. And you also can see like the Tenkan and Kishin, the conversion and baseline, the blue and red. When the blue crosses the red, generally good things happen afterwards, right? So you have the bullish TK cross over here, bullish for 3 years, right? Bullish TK cross over here, bullish for 2 years. Bullish TK cross here, bullish for like 1.5 years. bullish DK cross that just kind of happened about a couple of months ago. So there's a lot of confluences over here to really make you think that this is something that is looking pretty decent. And just going like look at your weekly chart too. Like if you look at the trend, if you just pull up like the bull market support band, which includes the 20-week moving average and the 20-week simple moving average and 21 exponential moving average, right? I don't like the practice in percentage. Let me change it to logarithmic. Yeah, but if you just look over here, you can see like right now the bull market support band is pointing up. Right. So these moving averages pointing up, and when it points up, it's more likely to serve as support rather than not, right? And if you also look at Ichimoku Cloud, there's a lot of confluence over here, support. You know, Matt was just showing the conversion line was potentially a support. It confluence with the moving support band is pointing up. So most likely it's going to end up, you know, being pretty decent support. If not, it could drop down, like you said, to the baseline. It could drop down to the cloud. All these are possible, but I just think that there's a lot of confluence over here so far. If you also look at just the trend itself, like 20-week moving average, 50, 100, like this is a bull trend. You know, like there's no argument. This is objectively a bull trend. So it just tells you that we've so far over the last, you know, a few months or to a year or so, we've just been, for the most part, making mostly higher highs and higher lows. So I think that rests my case in terms of what I think is going to happen. And I'm gonna let you all talk about it.
Well, what do you think that means for the meme stocks then?
Well, what do you think? I mean, I think the IWM generally signals more of a risk-on sentiment, right? So even for like the Bitcoin miners and like these crazy high beta stocks, they whenever like in November, I think this is the time we start announcing that there's a COVID vaccine. Yeah, so that might have been the catalyst, but honestly, like they've been accumulating, they've been ready to push up anyway. Because look at cycles, like it's not, you can use that as a catalyst, but like to be completely honest with you, I think this is all planned. But when you have something like this happen, like this is when the parabolic meme phase really started, right? So I think let me see what Dogecoin did. When did Dogecoin pump? It started pumping around November, December, right? Yeah, and when did AMC GME? Yeah, I guess GME started later, but like it's really started having a bull trend really started around like November, December, right? It's just followed through like this crazy parabolic top in January, February. So yeah, so if you think that IWM is going to do well, then you would think that these meme stocks are going to do well. So yeah, but you know, I mean, it's just the liquidity, like the irrationality and the liquidity kind of slishing around. I think that's probably what's going to end up happening if we end up having some crazy, you know, bull run. I also want to just kind of show you too. I'm going to go back to the Ichimoku Cloud here a little bit. Not the Super Ichio, they're very similar, the Ichimoku Cloud. So what happened after the cross, right? Over here, you have a big green candle over here, like very bullish engulfing right here. Just a couple months later, you know. What happened with the bullish cross over here, you know, like a big giant green candle here in November 2020, right? What happened with the bullish cross over here? A few months later, you have a gap up. This gap still hasn't been filled, right? So, yeah, so I think that something might be happening soon, and we're developing like the beginning of a bull trend that might last another like 12 to 18 months potentially.
Nice. It feels very much. Can I show my screen for a second?
Yeah, let me get out. Yeah, I would
get this other idea.
I would love to
But I
see
was
somebody
kind of
else.
bouncing onto my my followers. It's something I've been starting to incorporate in my charts. The Ellioticians and all of us, you know, we a lot of times we kind of look at the pandemic, right? The pandemic is the last big thing in our rearview mirror, and a lot of us kind of said, "Oh well, if we take you know, a low down here in price history, and then this looks like a really good, like here's a 1-2, and then now we're like in the third wave, which means we need a fourth wave before we get to the fifth wave, and then after this, then it's the, you know, the equivalent of the mouth, right? then we get the 3-wave correction that brings it all the way back to 61.8% of this whole move, or maybe even 76.4% of the whole move. But you know what I've been doing is I've been thinking about the way, you just go back in history and everything just gets smaller and smaller and more meaningless. And what starts to become more meaningful are like these big corrective moves. And so now I'm not drawing my charts anymore as this being the 1-2. I'm starting to look at this as a sort of a great reset. And this is the beginning of the cycle, and here is your 1-2 right there. And so now what we're getting here is the micro 1-up. This looks like an extended wider flat of the two, kind of. And then, so this is not really 3-4. I need to let's just say,
could it be, if you go back,
like this starts to look like the wave start down here.
Yeah. So that would be your beginning point for your wave 1.
Exactly. And then here's wave 1. Oops. No, don't do that. Here's your 1. Here's your 2. And they've got the nice wicks and everything on them. You want a good wick on a 1 and a 2. And then this looks like it just kind of the 2 fell over again. And now we're coming back up. And so this is your minor degree wave 1 of 3. Now we're in wave 3, 1. We just need a little bit of we may not need the 2 actually. And we may not need a really big 2 down here because we did this whole extended wider flat thing. So it's kind of consolidating and building up pressure. But this could be the 1-2. And then, 3 could be way the next 18-month bull run you're talking about. Could be the strongest part.
The strongest one's going to be 3, right?
Wave 3.
Yeah. So you got to take us to like 300 or 280 to 300, kind of what Matt was saying too, around like 280-ish, 300-ish, somewhere around there.
And then because the 2 took a while, we got the extended wider flat for the 2. The wave 4 could be really fast. It's the theory of alternation, right? If your wave 2 is longer, your wave 4 is shorter. If your wave 2 is really short, your wave 4 gets longer. And then then 5 just keeps going.
And then happens at the turn of the decade.
And then this is sort of something that I've been doing with Tesla already anyway. And then once you get your 5th wave up, and then whatever correction you get here, it doesn't have to be 61.8% of the whole thing. This becomes your 1, and this becomes your 2, and the cycle of history just keeps going.
Just keeps going,
yeah. So like all your wave 5 to the C's just become your next 1-2. You just keep pushing it, and things just keep human civilization just keeps growing and expanding. Just like the rest of the universe.
Which is also shown on the GAN as well. Like we just keep expanding. So.
All right, I'm gonna stop sharing now, so whoever's gonna catch it. There you go.
Matt, you've been quiet.
Yeah, I've been drinking my coffee over here on mute.
It's early morning.
Do you have anything to share?
About IWM or what?
Or anything? Yeah, I mean, we were just kind of chatting too with Tracker. We're talking about, I think, because like I was actually kind of surprised too that Tracker was talking about potential bearish case, and he like bought a bunch of AMC.
I did. I first bought.
That's.
I bought like 100 AMC for fun, and then I kind of got serious and bought 1,900 more shares. And I have 2,000 shares of.
Can you show us your bullish case for AMC Tracker?
Yeah, I'm sorry. I should bring. I'll bring.
You can pull it up.
Yeah, please pull up your AMC chart. I'm curious. I mean, I also bought like a few shares of GME for fun because I do see some bullish things about GME as well. But
here I am again pretending to be like the Great Mattsby and trying out GAN charting.
We're all pretending to be the Great Mattsby.
I know we're aspiring, right? We're aspiring to be the Great Mattsby with GAN.
Well, the thing is, like with GAN, it's not about eyeballing it; it's more mathematical. So once you guys figure that out, then it'll just pop up magically, but it's all in my trading course now.
Ooh,
He's trying to get us to buy his course.
I think I might have to. I think
I think I
don't
might
think
have to too. Yeah, I'm
I'm
curious.
not gonna be able to avoid it.
Yeah.
So yeah, just basically after again, I'm always looking for a nice 1-2, and AMC wasn't doing anything for a while. Then suddenly these are 4-hour candlesticks, and then so here's the big, the lean into the screen by what's his name?
Rowan Kitty.
Yeah, and so he sort of leans into the screen, and then AMC like well, GME pops up first, right? AMC is just like is like one step behind. So
Yeah.
AMC falls up, comes up,
Yeah.
and then falls off. And I was just looking for I started buying about just over $5 a share, like 5.40. I bought a couple,
Yeah.
I bought a few more, and then bought a few more, and bought a few more.
Oh, so
I think my
you
average
actually,
cost,
you actually,
yeah,
interesting.
my average cost is 5.15
Yeah.
for the 2,000 shares that I bought here.
Yeah.
And as long as $4.18 holds, that was the low struck right here. And here's my zero fib. So this is my wave one goes way up here. That's wave one. Wave two down to here. So if
Man.
418 holds,
Yeah.
then this could go. Let's see. Do I have this? Yes, I do have it locked.
Man.
Go to 12.12, 807,
Yeah.
1855,
Yeah.
1458.
And these are the subwaves for the greater wave 3. Yeah.
Exactly. And then 28.95. Then we get
Wow.
the obligatory correction down
Wow.
to maybe 1356, and then it just keeps going. I don't know if it'll keep going, but I do have. I've got 72.54 here.
Do you think it's going to happen in that time frame? I mean, like you're talking about.
No, my charts never explain time very well.
Got it.
Only price points. So
Got it.
you know, it's kind of neat. If 418 holds, then we should get 12.12.
Yeah.
If 807 holds, then we should get 1855. It's kind of cool like that. And of course, things can fail at wave two. Things could fail at this wave too, right? We might not get anything. This just falls off to oblivion. But if we get this wave one up and this wave two doesn't die, then we will get 1855. And then if we don't lose the whole thing, comes apart at the wave four here, then we will get 28.94. I've got my whole degenerate gambling plan here, which was if I just bought like a little bit, bought 166 shares at the beginning, and then I managed to sell off like a little less than half of it at $26 a share here. You know, I'm not even going to try to get 28.94. I'm just going to try to sell about 26.
Yeah.
And then now I've got all my money back from it. I've got a little profit and 100 free shares. And so I kind of did this plan. How many times have I done it now? Looks like 5 times. I did this plan 5 times bigger. I don't know. It's just, you know, if it gets super crazy when you see 100 or 250, then it gets crazy. Risk 1,000 to make 12,000.
There's no such thing as free money, but
I don't know. Do you guys want to keep going and talk about your AMC charts, or is it premature?
Matt, do you have one? I'm sure you do.
Yeah, I do, but it's not anything special.
That's fine. I wasn't thinking that we would talk about AMC.
Yeah, I mean,
I don't mind showing my crazy Elliott wave charts because you know it shows possibility, and you know if 418 doesn't get broken, this is what could happen.
Yeah,
it's just kind of neat. Like
I can share mine real quick if you guys want.
Okay.
Yeah, sure. Yeah, I always like to hear because I think I see like similar things as you do, Matt. Like it doesn't look as good as the GME chart.
Yeah, I'll pull up GME too after this, but you can see my screen.
Yep.
Okay, so the thing with GAN is you need to go from a pivot low, and the only pivot low you can use is this one that just happened. So that means GAN is not really that useful here, but it did mark the wick up here, really. You know, it wicked down. Now it's just riding these angles, but the thing I don't really like is when you go onto the daily Ichimoku here, is it's still stuck under the conversion line, and which is going to put pressure on it, probably going to go back down to the cloud, really, which is maybe 378 or so, or maybe even the bottom of the cloud at like 321. So if you're going to take a stab at it, I would do it in this range here, because these angles don't really look like good support at all, because the previous breakout range would be within the cloud, like right here, you know.
It's most likely going back to that green line, right? Center of the 45.
Yeah, maybe like this green angle here, or even like that green angle. But usually after a breakout, price doesn't just float in the middle of nowhere. There's really nothing here except for over here. But usually I would think it might, you know, maybe get back down to the previous breakout range here. And it's possible it could just bounce at the top of the cloud here and go up. But I just don't really think it's as good of a case as GME. And I can just pull it up real quick too, if you guys want.
Yeah. Yeah, I mean, I agree that the potential, the GME chart looks better.
Yeah, so GME on the daily, it's still stuck under the conversion baseline 2 for the Ichimoku on the daily chart. But right here. But when we go to the weekly chart here, we'll pull up, and this is like that YouTube short that I made, that you don't want to buy resistance, you want to buy support, and it so far is holding this angle pretty nicely. It even wicked down to almost the bottom of the cloud, so that would have been a great like buying opportunity, which is probably where you bought some, Cat, right, in this zone?
Yeah, I ended up buying like around a little bit below the cloud.
Yeah, but now like if it closes the week above this angle again, then it could just continue higher again. So this looks like it could have been a successful back test right there, and looks like it could be ready to go up. But the thing is, with the baseline up here, it still could be some resistance as well in the 37. So, but that's still pretty good profit if it even went up there, you know?
Yeah.
But yeah. So out of the two charts, I like GME a lot more than I like AMC. So, do you want to talk about yours, Cat?
Yeah, sure. I mean, I don't have much, but I'll talk about what I see here real quick. You know, let me go ahead and show you.
And GME is definitely leading AMC.
Yeah, like
it's sort of in the wake.
Yeah, it looks more bullish in terms of the overall structure to longer time frame wise. So this is AMC. If you first look at AMC, there's a good thing. I see what you're saying, Matt. If you look at the weekly Ichimoku clouds like one underneath, and then you're gonna have a lot of resistance above, right? Like I'm gonna get rid of this support here. You're gonna have a lot of resistance above, right? The good thing about it is, if you look at the moving averages, so you look at like the Boeing support band, the 20-week SMA and 21-week EMA, it's actually looking like it got rejected over here. Obviously, like it just couldn't go that high without having some kind of correction. But actually, it looks like it's just been hugging the band. Like I think it might end up going sideways here a little bit longer, maybe for another couple weeks or so, trying to flatten this bull market support band, and then maybe use that as like a launching pad and could potentially make some micro higher highs, if you will. Because over here, technically, this is like a little bit of a higher high compared to here. Like it looks like there might be a little bit of a trend reversal here on the smaller time frame, right? So I feel that there's something that's happening, but on the longer time frame, there's still a lot of headwind they're going against. So like for example, you just put up the rest of the moving averages, like 50 is like right up here, is like very negative sloping, right? So it could potentially serve as resistance. It could potentially meet price around the $8 range, just kind of like what you're saying, and it could end up getting rejected somewhere around there. And it might have to find support maybe from the rising bull market support band, just kind of find some support underneath. And we have to challenge the 50 moving average here, try and turn it flat, and then you're going to have another 100 moving average up here that's going to be negative sloping too, right? On top of all that, you also have a lot of headwind when it comes to Ichimoku cloud, up here too. Right now, I think the bottom of the Ichimoku cloud is let's see, yeah, that's around like, what is it, like 20, which is not bad. Yeah, which is going to be a potential out profit, but you're also going to end up heading into a very thick cloud over here in like August and September. So I can potentially see kind of punch into the cloud. They might need to kind of backtest some of the stuff down here too, right? Yeah. So I can see potentially like get $8 and it got rejected and then somehow push just through time, push inside the cloud, and then maybe even need backtest the bottom of the cloud before going up higher, right? So that's kind of what I'm seeing if this trend change is possible, right? Right now there's just a lot of headwind. for AMC. It's a little bit tough. If you look at daily, you know, it looks a little bit better. If you look at the if you look at the Bollinger Band, it kind of tells you a little bit of the story. You know, just probably just got way outside of the upper Bollinger Band here on the daily. It's unsustainable. Went back down inside the Bollinger Band, and the 20-day moving average is pointing up. So you're kind of stuck. It's still on like the upper part of the Bollinger Band. So it's still like short time frame wise, it might still have some bullish momentum going for it. And the Bollinger Band is starting to squeeze a little bit here too, right? So you maybe need to consolidate a little bit further, have a little bit more squeeze before the next move up. If it's able to stay above the 20-day moving average, yeah, I suppose it can hit 8. You know, that's a possibility. But
There's my 418 right there.
yeah, yeah. So so we'll see. I mean, I don't know.
It's so funny. Can you pull back just a second? I just want to say, like, bring it back a little bit so you can see more of the chart again.
Like,
if it didn't say AMC on this chart, you know, when followers of mine come up and ask me to look at the chart out of the blue, and I say, if I look at something like this, I say, well, you know, this thing's got a lifetime downtrend. Don't trade this. This is why these are degenerate gambler stocks. And the last spike we just had, it just looks like a blow off top. It looks like it, you know, it got rid of a bunch of it just blew off a bunch of bullish momentum, so then it can now drop farther.
But I think I mean, at some point, too much is too much, right? Like, you know, you have a bunch of people shorting this thing. You're gonna, like, you can't just run the RSI on the weekly down here like in the 30s and 20s for like, you know, months and months. Like, you just can't.
No, that's true.
And they're not going bankrupt, like, you know, yet anyway. Like, it's not. So anyway, that's my AMC chart. I'm gonna pull up the GME. I think GME looks better. You just eyeball it, you can see like it looks better, you know.
They're both great entertainment. Like, if we just talk about from a fundamental, we're not fundamental analysts, but you know, they're both entertainment stocks, and if they could just find a way to pivot their business model, they really could turn things around.
If they can, and I do believe so, but I think whenever you have some capital coming in and the CEOs are not really that kind of mindset to come up with, you know, like they're not the board and their CEO, they're, you know, I don't know. It's going to be hard to capitalize on these things, right? The one good thing I like about the GME chart that I didn't see with AMC is this. You can see a very nice weekly Bollinger Band expansion. Like, this is a very, very bullish kind of look to it. It looks like there's a lot of very impulsive price action to pull the Bollinger Band open. And the median, the 20-week moving average, is pointing up. So it tells you that this uptrend is probably going to end up keep on expanding. It's probably going to end up keep on going up. That's what I'm seeing, you know. And right now,
alligator looks really hungry.
Yeah, alligator's mouth is like totally open, right? Upper lip, lower lip, the tongue's pointing up. It looks hungry. Right. And basically, simply, like, price just went way outside Bollinger has come down, hit a back test something, right? Which is the Ichimoku cloud, as Matt was showing. And then you basically going to gravitate to the upper Bollinger Band if it's a bull trend. And you just had a very, very nice higher high over here, right? And this might have been the higher low that you're talking about. Maybe it goes back down and form another higher low. You know, there's no guarantee. Because if you look at the Ichimoku cloud, certainly it could be coming down and back test the Bollinger cloud over here around like 16, 17 bucks. That's entirely possible. And that would also be where a 20-week moving average is pointing up, right? And that would still technically be a higher low. This would still be a bull trend. So there's no guarantee that we've, like, you know, really found a local bottom over here. But this chart is looking a lot better because it's also above the Ichimoku cloud. It back tested a weekly Ichimoku cloud, and it looks like something's happening with the Bollinger Band. This chart looks better. So doesn't necessarily guarantee anything, you know, but I just think that this might be, and if IWM is about to blow up, this might be the beginning of something potentially. So
I agree with you. Maybe I'll switch horses at some point here if I see an opportunity.
Yeah, I mean, I don't want you to get yelled at by a bunch of apes. So
oh, I can take it. I get yelled at all the time.
I don't. I mean, like,
I'm the Tesla tracker after all.
The community.
And we didn't even talk about Tesla.
yeah. I mean, do you guys want to? I mean, nothing's really happened over the last week or two.
I thought by now Tesla would have moved down.
Yeah.
deeper into make my measured move, at least make a good start of it. But no, instead, it's just still hanging out.
Yeah, and we kind of thought that it was going to range sideways, right? Like, like all three of us thought so. But I
Yeah.
think Tracker, I think you're the only one that were expecting a little bit more of like a crazy volatility move before going up.
Yeah.
When yeah, I think it's probably going to range sideways here, get pretty boring. Like the top is like 200, the bottom is going to be like 168 or maybe lower. So yeah, yeah.
Yeah, I'll just show everyone real quick.
Yeah, go ahead. Yeah.
My
Pull up your Charlie Day chart.
yeah, here comes my Charlie Day charge.
Yes. I've been missing it.
Oh, here it is.
All right.
So many colors.
I know it's a pretty chart because you pull back far enough, and then all the blue background is my larger degree triangle
Yeah.
that I'm tracking here, and then here's the 101. I'm sorry, no, that's the 130. Wait, low. So this is off of the 299 29 high, coming down, and then we'll get into the screen here. So we just had this second bottom that I kind of predicted maybe a month ahead of time, a month too early and $5 too high. We got the 138.80 low. Price came back up here, tried to, it just towed the line right under 200 and couldn't make it. Fell back down. And then what I'm calling for with the people that are following me is that I think we're going to measured move here. This A wave, you can take the length of it and here's the end of the B wave. And so you just stick it right here. That's what they call a measured move. And that gives us about 156.07. And everyone else is saying, oh, look, it's, we went up, we came down, we found support. It hasn't made a lower low than the 167.50. So this is going to keep going up. Everyone thinks it's going to go up. And I'm still holding out for, I think we're going to get one more push down. And some sort of similar to what you had on that chart where you had the two lows, right? Back to this one. Where there's the 101, 21, 22 low. And we kind of came up, and this is the decadal anchored VWAP, this purple line, and that kind of makes a cloud above and below by standard deviation. We dip right back down to that. Came up to 229, the 299.29 high, and then came back down. And so now I think this one is equal to this one. And then we're going to get one more move to here, just like this one. That's what I'm looking for. I'm looking for history it doesn't always repeat itself, but it often rhymes, right? Is the expression. Anyway, so that's it. That's me and my Charlie Day chart and all the stuff.
Do you think there's a possibility that you're becoming too big and you're getting front ran?
Say that again.
Do you think there's a possibility that you're becoming too big and that a lot of people are following your charts and they're looking at your targets and they're front running you?
I don't know. No, I don't have any illusions. I'm not that big. My following's not that large. Okay. Tesla's an enormous market cap, and I just I'm just sitting here in this tiny little corner. I'm like a little house spider.
I'm just trying to boost your ego after you woke up from your nap. That's all.
I'm like Charlotte in Charlotte's Web, and it's like drawing. That's some pig right here.
Yeah.
I believe we can. I believe I can help as many retail investors and traders as I can get together under my wing and try to help them make more money trading all this crazy volatility with Tesla. Yeah. And they're just, this is the tip of the iceberg. It's gonna get bigger, and there's more and more runs up and down, up and down, up and down. And you can trade the whole journey and make money the whole way. That's my idea anyway.
Yeah. I'm lazy. I just like to buy under like 200, and I anticipate
it's much easier, right? You just like buy.
Yeah.
You buy the bottom, you buy the dip, and then you just wait.
Yeah, like if it dips down further to 150s, yeah, I'm gonna buy more shares, but like there's always a possibility where it doesn't hit, it's always tough, like you said.
All right, I'm gonna
But
stop my screen sharing here. I'm not sure who's gonna pop up when I do that. I guess Matt. Matt's
yeah,
screen.
yeah, I can show mine real quick. I mean, I don't have
Okay.
much, but basically last time we were just saying that we're hitting the bull market support band as resistance, right? And sure enough, it's been serving as pretty decent resistance over here. And it's just kind of basically crawling, underneath of it, building up some energy. It probably would end up oscillating around and turning it flat, before pushing up. I don't know how far it's going to go down, to be honest. Some of the lot other targets I was looking at, could it be like around, um, yeah, like 170 to 168, somewhere around here could potentially be support. It could potentially break down a bit, but like right now you can see like it's been ranging between the weekly conversion line and the bull market support band. You know, it's just been boring ranging, and the volume's not very high.
Yeah.
So yeah, it's not gonna happen. Like you said, there's a vote that's coming up in a couple of weeks. This is not gonna be sustainable. There's going to be a big move, but it may not happen for another couple of weeks potentially. So that's kind of what I'm seeing. It's just ranging. There's nothing else I can really say about it at this point. So
Yeah,
oh,
the Tesla spent the entire day today just like ranging.
yeah,
We're kind of stuck between 180 and 170, and
yeah,
as the time wears on, I start to tell people, well, just remember there's a much greater risk of upside than downside from here.
yeah.
So
I think so.
following me looking for lower is
Yeah.
risky, very risky.
Yeah, I mean, potentially hit some of the levels down here, like a wick down here to like 160, right? It could get a little bit lower than that, and that would still be potentially looking pretty decent. It's just ranging, like it doesn't bother me one way or another. I remember Matt's scan, it was just kind of like there's an arc and it could potentially go down further on the arc, and it would still be
Yeah,
above. Yeah,
I can
you
I
want to
can
show
show
it?
that too.
Yeah,
Yeah. Okay, so I'll start with the daily chart because I think the daily chart is actually showing or telling the story right now. And you can see basically why it's stuck in a range. Like the 8 EMA is resistance, the conversion line on the daily is resistance, right? And the 21, it did close the day back above, but price will probably just gravitate towards the top of the cloud in the low 170s, and maybe even the baseline again down here into like the 160s or so, high 160, 169. Yeah, so this is probably telling the majority of the story. So probably it'll gravitate here, and then we'll see what happens. And since it bounced here, it could bounce again and go higher and higher, right? So, and yeah, you already showed the weekly chart, but I'll just go to the log scale again for you guys, and I'll
We love
take
your
off
Gantt
the
charts. We're such huge fans.
oh yeah, yeah,
Yeah, I mean, but yeah, you guys know I've been talking about this for a long, long time. Like right in earnings,
Yep.
I was like, yeah, it's just gonna follow the arc down, and that's exactly what it's done, really, the whole time. And honestly, could it come back down to there, like 159? Well, the next when is the vote? It's like the 13th, right? So
June
that would be the
13th.
week of the 10th.
Yep.
So if it did wick down to the arc on the week of the 15th or 13th, then that would be like the mid 150s right down there. So that would be a possibility, which is kind of what you were saying
That's
anyways,
what I
Tesla
got.
or Tracker. Yeah. So that is where time would
156.09.
meet the arc. Yeah, that's where time would meet the arc. Or conversely, it would go back up to where that 3.618 fib was, as I was talking about last time, and the blue line up to 200, right? So
Yep.
this is the wide range that it's really stuck in, and there's really nothing bullish or bearish about this chart right now. This is just the range, so we just need more time. That's all.
yeah. If it goes slower, buy more. Then
Yeah, I mean,
yeah,
honestly, it's
yeah,
looking more and more likely that time is running out, and it looks like this is going to hold. And
yeah.
the majority of the demand zone is in this area, anyways, right here. So pretty much, if it goes down there, yeah, I'm gonna buy a lot more. So
Yeah.
that's the
I'm
plan.
personally 100% sure that the 138.80 is going to hold as
Oh
the
yeah,
next low.
Oh yeah.
yeah.
Talk that dirty talk. Yeah, keep talking that. Yep.
I know, right?
But it's just like it's following the same pattern that this happened. Like, look at how it followed this arc down, then it went way
Exactly.
below and then gravitated back
Yeah.
up. The same thing just happened here, just not as extreme. So this is kind of like the V bottom that we saw here.
Yeah.
And now it's just it's doing what it's doing here. You're just going back down, testing the arc, and so it could do the same thing and then take off again. So it's basically just repeating the arc, exactly what we saw here. So yeah. Anything else, guys, you want to talk about?
That's it for me. You guys were really kind to bring Tesla back up again here.
Of course, yeah.
Yeah, no, I think I'm good. I'm gonna try to pull up the institutional accumulation data that's giving me a little bit of pushback here. Not much has changed on the data. Yeah, don't worry about it. I think we're good.
Okay.
Later, I'm
All
going to
right,
go back over with that section with the Cantonese Cat going over the IWM again. That was pretty amazing doing the comparison with the.
It's fun.
So you just got
Yeah.
got flipped from bear to bull now, right?
Oh yeah, no, it looks fantastic. It's it's all coming around full cycle again.
Yeah, I have a way to flip bears into bulls, and then and then it doesn't work out, and and you end up getting
Then people blame you.
right, and then you backhold together with me. So I'm sorry.
Oh, it's really cool. Your IWM over SPX or SPY. It
Yeah.
makes sense. It looks like an RSI basically, just kind of
Yeah,
going
I think
from
it tells
1
a
to 0
story.
and back.
I think it
70
tells
to
a
30
story.
and back.
Yeah, it's fun. Like, mess around with it. See what you think. Let me know.
I love it.
Yeah.
Thank you guys so much. I really appreciate it.
Yeah, no, thanks for having us again. Thank you for being the leader that you are.
So
And
fun.